Alrighty. Alright, folks. About to get the FOMC meeting and interest rate decision in about 33 minutes. So we have the interest rate decision here at 2, and then Jerome Powell should start speaking at 2:30. So alrighty. We're all set up, ready to go. My position did go into positive territory, profit, briefly. Just chilling out here now. I would really like to see this get above 600. I like this music. Alright, looks like we're starting to take on a downtrend here. So, we'll see. We might get a little bit of selling action before 2 o'clock. But I don't think the real action is going to start until 2:30. So once 2:30 rolls around, that's when you're going to see the real moves. I could get Jerome Powell on here, background, when he starts speaking at 2:30. We'll go through this one. So we still have 1 hour until he starts speaking, but I have the audio of Jerome Powell ready to go live, so I'll be putting that audio into the stream once that time comes around. For now, we're just gonna chill, watch the charts, do analysis, answer questions, hang out. We do have the interest rate decision coming out in 30 minutes, and then the press conference in 1 hour. And they're also giving us a bunch of projections, so this is a pretty big day. Big day. Earlier this morning, we did have PPI come out. I didn't even take a look at these numbers. It didn't really have too much of an effect on the market. We can take a look at them. Let's see. So the consensus was, is this all? Get this out of my face. The consensus, let's see. Was 0.1 and it went to 0. So we actually came in below expectations. So producer price index came in a little bit colder than expected. So that's a good sign. That's actually bullish for the markets. Producer price index does front run CPI. So like when inflation was going up, PPI was going up faster. It was going up first. Because producer price index, the prices at the producer level trickles down into the consumer level. And yeah. Take a look at our heat map. See what we have here. Believe it or not, LLY is among the strongest. One of the strongest gainers today. Looks like one of the biotechs are going up, Vertex. But big tech, LLY is outperforming big tech right now, so besides Netflix. That's good. Tesla's getting hammered. Adobe down. Verizon's down. Pfizer. Moderna getting hit. I think they're taking the brunt from the COVID vaccine stuff. I don't think there's much demand for the vaccines, or not as much, and they're not putting into research, so them and Pfizer are getting nailed today. Lind getting hit. Ford's taking a hit too. Not too bad though. And Adobe. Live Nation as well. But most of the chart is green today. But we're going to see this light up either red, bright red, or bright green today, I think. So right now, you can tell a lot of the colors are dark red and dark green, which means not much price action. It's kind of a muted market. Alright, now this website's starting to annoy me. Come on. Okay. There we go. Hey, Harold. So, I hope you guys are enjoying the content. I know some of you are, but I feel like I bring a different approach to the market. I mean, I'm not sharing any groundbreaking information or analysis here, but I feel like most people that post finance or trading related YouTube videos don't do like. Not many of them do this sort of analysis, more of a fundamental look at things and looking at seasonality, looking at the overview instead of just focusing on the technical analysis. Now, I love technical analysis. I've been living in the charts for literally like years now. But I've found that my trading went in a positive direction as soon as I, put less emphasis on the charts and started looking at the bigger picture, starting to look at the flow of the money in the economy and looking where money flows around. And seasonality is a great way to identify that. So, I love technical analysis, but it's not the end all be all. So I'm hoping you guys enjoy, the alternative view. It's not really an alternative view. What I'm doing isn't groundbreaking, like I said, but I feel like most YouTubers that stream or trade on YouTube who are real, they only focus on technical analysis, and that's about it. I kind of try to roll everything up here into one strategy. So we're getting a little bit of a pullback here. Not too bad on LLY. The Qs and the SPY are pulling back a little bit here too. A little bit of profit taking and selling coming in to the last 23 minutes before the interest rate decision. Again, that comes out in 23 minutes. And then Jerome Powell will start speaking in 53 minutes. So 2 o'clock and 2:30. And my position, it was actually above break even. So I was in profit like 2% earlier. Obviously that was back here. I was making lunch and I saw my position going up. I was all happy. But now we're kind of coming back, dipping back below. So 15 minutes turning red here. So we're getting a little bit of sell action going into the 2 o'clock hour. And you can see the same things happening with the S&P, Qs, the Russell. So this is a market-wide sell-off. VIX is increasing right now. I was watching VIX. It was up about 1% pretty much all this morning. And just around 12 o'clock it took off. So the VIX is starting to increase, which makes sense that stocks are starting to sell off a little bit. I'm hoping LLY, the trade I'm in right now, gets above 600. I think there's a good, if we get a good news event from the FOMC and Jerome Powell today at 2:30, I'm hoping to see 600 break on LLY. That's a big psych level. Again, basically flat on my monthly trade, down 6%. Which I consider flat in the options world because options is so volatile. Yeah, that's where we're at. Start taking a look at the other stocks here. AMD, although it had a big run up in the past month, basically the start of December, AMD has been ripping higher. It's having a pretty calm day. Google's selling off, Tesla's selling off, Microsoft's selling off a little bit here. Yeah. Take a look at the bonds. I think the bonds are starting to get bought back up here, so this is going to be a huge indicator of where the market wants to go. If you see yields, especially in the 10-year, drop today or throughout the rest of this week, if you continue to see them drop, this market's going to rip higher. I mean, this market is really, like, if we have a good FOMC meeting today, speech by Jerome Powell, press conference, I mean, it's going to be a good day. If you could, guys, hit the like button, pump up those likes, try to get more people in here. The more you like the video, the more it gets promoted to the YouTube algorithm, and we get more people in here, hang out, try to spread my type of analysis around. I think it's good that I'm kind of going against the grain as to what the rest of the YouTubers are doing, and I'm showing real profit and loss here. We're gonna see if we have a good day. I'm gonna make good money today, so I'm crossing my fingers right now. Hi, thanks for your insight on PayPal. Got in PayPal after it went below yesterday's high. Did it go down? Let's look at PayPal. Below yesterday's highs. Nice. And so it pulled back a little bit here. HMA's turning green. You're pumping up now, so yeah. PayPal, and PayPal's a smaller cap stock, so it can easily go up, 2, 3, 4% or higher if we have a good FOMC release, good press conference. This thing can rip. But good job buying into the lower end of the day. You'd rather buying down here or even at the midpoint at like 59 than up here. Saves you some trouble. Delete these. These are just lines I put in to mark when the interest rate decision will release and the press conference. This show date. So all the websites I use, stockcharts.com, Unusual Whales for the seasonality list, Finviz for the heat map, and of course the economic calendar. That you can get this anywhere, but especially these two resources right here, Unusual Whales and stockcharts.com, completely free to use. You don't even need an account. You can see I have a sign-in button here. Same thing here, free trial and login. I don't even have a login. So you can go right now onto these sites and do your own analysis if you want. If you're interested in looking at certain stocks, go ahead. Completely free. And so is Finviz. Finviz, you don't even need an account. So that's what I like about sharing this type of stuff. It's completely free. It's public information. You don't need to pay. I think paying for certain things, like I was going to buy Market Chameleon, and I steered away from that because all I needed from Market Chameleon was something like this, which I found for free on unusualwhales.com. So I'm always an advocate for free stuff and free resources. That's another reason why I just do YouTube, because everything I'm giving to you guys is free. So I don't believe in paying for stuff to learn. I think education, especially nowadays with the internet, you can learn just about anything for free. Yeah, StockCharts is a great site. And StockCharts, not only does it have seasonality, but it's got all sorts of other things in it. I've never really looked at anything else in here, but you got like performance charts, which these, I don't know if you have to have an account for this, but I use the seasonality. Finviz has something similar too. Finviz is a great site if you're really into technical analysis, because you can go into the screener and you can look at technical, and you could put into the technical the type of pattern you want to trade. I think it's under here, TA maybe? Yeah. TA, and then maybe it's under charts? Forgot which one it is. Oh no, technical right here. So if I wanted to pattern, you could put in whatever you want. So if you, let's say you want to trade a channel up strong, right? You could see here, you get, let's put this to charts maybe. It shows you like all buying opportunities. So like, here's just a random stock, AMLP. Right now, it's at the bottom of its upwards trend. And every time that the price comes to this level, it's a good buying, it tends to be a good buying opportunity. Now, I'm not saying that this is a good buying opportunity. This could flush down and go lower. But it gives you trade ideas. It helps. And this is all completely free. And you can look at this on a daily, a weekly, a monthly, right? So, but I just use this site just to look at the map. I know some people like to look at this, which is nice, and this is going to be helpful today to see where the whole market's going to go. So we have the interest rate decision coming out in 14 minutes. And we're also going to get the projections. So this is going to be a big release. So we're going to see when the Fed is going to cut rates. I'm also going to plug in Jerome Powell's press conference once that comes on at 2:30. And yeah, we'll hang out in the meantime. Yeah, the performance charts are good. What are your thoughts around earnings as it relates to your position? Netflix has earnings on. Yep. So, yeah, I was talking about that yesterday. I'm going to be going into Netflix on January 2nd. I'll be opening the trade on January 2nd. I would usually open this trade in December, like December 29th, but because I want to close out my books for the year, I don't want to have a trade open going into the new year. So I'm going to start it on January 2nd. But yes, we do have earnings coming out on Netflix. And that's probably a reason why Netflix does well in January, is because they release good earnings in January. So using the seasonality combined with the earnings, we may actually get a really good rally throughout January. Or earnings are bad and I lose money. But that's why we manage risk appropriately before entering the trade. But yes, that's something I'll keep an eye on. I'll definitely be streaming for this. But earnings are wonky because you can have the earnings come out and they come in line. Let's say they come in line and they do well. And then let's say the earnings do well and the stock plunges, and then once the earnings call comes on, then they'll pump the stock back up. That's what happened with AMD. So that's my thoughts around that. But that'll be something I'll watch very closely. I'm hoping Netflix stays below this 485 level. I'd rather buy Netflix in a discounted area because that gives me a better chance of making money to the upside. Yep. Yeah, Netflix. Yeah, it had. Well, they've released. I think I could probably find the article in here. But they've released their viewership or their subscriber base or something. They released some metric for the first time. I think it's like the viewership. Yeah. Netflix releases full viewership data for the first time ever. And I'm just going to assume it was good. I had never really looked into that article that hard, but I'm assuming it's good because the stock rallied after that data came out. So that's all I really need to know. It's good. But yeah, I'm actually surprised Netflix never released that information in the past, but they are now. So if anyone's just joining, make sure to hit that like button. Let's get the likes pumped up. I want to try to get these likes pumped up today, spread the stream, get the YouTube algorithm in our favor. Again, if you're viewing for the first time, I show real profit and loss. I'm transparent. I don't sell anything. No courses, no Discord. Everything I do here is completely free on YouTube. So if it's your first time joining, hit the like button, hit the subscribe. I have plenty of content explaining my strategy. And make sure to hit the bell notifications as well, because I do like to hop on stream at random times, and I try to post at least every couple weeks or so. But I mostly do streaming. So I really enjoy the streaming because I'm able to answer questions and talk about the market in real time. I was wondering why it ran like that. From what I've seen historically, is tech stocks typically move higher into earnings roughly 30 days prior to earnings. Yeah. Yep. So that happens a lot. Earnings will come in. Well, the price action will come in before earnings, and by the time the earnings come out, the market already priced in the earnings. Seems like PayPal retest highs. Is it going back up? It looked like it was going up before. I had the HMA on it. It turned green. Let's see. I want to see this 15-minute turn green on the HMA. I have a 25 whole moving average right now just to identify trend. I really like this moving average because as soon as it turns green, you wait for the price to get near or to the HMA, and then you can enter in and buy the continuation. The HMA is a little bit different than a normal EMA or simple moving average. It tries to take into account the mid price of the trend. So as soon as you come to the HMA, you're usually at a midpoint in price. So like right now, if I had to enter this, I would wait for PayPal to come back to this HMA line, this green line, and then I would enter. If I were to enter right now, I'd probably be chasing. But I don't day trade anymore. This is a day trading type of scenario. But HMA 9 or I use 25. HMA's the calculation uses square root, so you want to use numbers that compute well at the square root. So like 25, I think 6. What is it? I think it's 6, 9, 16, 25. Like you want to use those kinds of numbers. So I have 25 on here right now, and this is a HMA colored. So if you type in HMA colored red, I'm assuming you're using TradingView. It's this one right here. Basically, it turns red when it slopes down, turns green when it slopes up. Pretty useful indicator. And listen, it's not the end all be all. Don't solely base your trades based off of this, because you can get hurt, just like any other indicator. And I don't use this to trade. I just use it as a point of reference. My trade strategy is a little bit more in depth than just what I see on the charts. Yep, 25 HMA. Yeah, supply and demand's good. Support and resistance, I use that too. I was using that this week for Eli Lilly right here. I was watching this 580 level because I noticed at this 580 level, we were getting a lot of bottom wicks and reversals. Some resistance here, bottom wicks, right? Bottom wicks. So this 580 level was a point of interest for the buyers. The buyers were stepping in at this 580 level. And on Monday, I was streaming all day on Monday. When the price was down here, Monday morning, I was like, this is probably a good buying opportunity. Especially, I mean, this dump on Monday happened because of news related to LLY. And the news wasn't really that substantial. It was kind of an overreaction, in my opinion. Alright, so we got 6 minutes, folks. 6 minutes. So we'll get a good idea of what's happening there. Let me... Alright. Hopefully I can get the release right away. I'll have a good idea of what the speech is. I'll bring that up on screen here. So I'll be refreshing this page, and we should get the PDF straight from the Fed. And we can take a look at the what they said. Most of the time I just watch what the news says, and because they summarize everything pretty quick. But obviously I can't be putting the news up on my stream. That would be copyright violation, and I'd get thrown off YouTube. I agree. My thoughts are increased in dividend was a bigger thing. Yeah, and that I completely forgot about that. But on Friday, LLY released, well, they didn't release, but they announced that their dividend would be increased by 15% for the first quarter. Right? I think they pay out quarterly. Let's see. Yeah, I think they pay out. Yeah, they pay out quarterly. 8 plus 3 is 11. 11 plus 3 is 2, so it's quarter. Yep, frequency quarter. So yeah, that was huge. That was huge news. My opinion, I don't think they will do anything. For the Fed, yeah. So I'm pretty sure the general consensus today is that the Fed interest rates will remain where they are. There's going to be no change. The big news is going to be this. The interest rate projections and the press conference at 2:30. So for the Fed, we should start seeing movement in JP. Yep. 2:30. Yep. Yep. Yeah, that's what I was saying earlier. 2:30, we're gonna see the real moves. We may get a little bit of volatility in a few minutes at 2 o'clock. Now we could see big volatility in a couple minutes if something, if they cut rates or something big happens. If they increase rates, if they really surprise us. But if interest rates come in flat in the next few minutes, then we won't see much volatility until 2:30. So. But I think this should pop up right away. I think. Should get the minutes. Well, we should be seeing the statement from the Fed. On this, we'll get the volume up. Watching the index. S&P Qs pretty much flat. Oh, I'm holding on. Steve, good luck with the PayPal position. I hope it pays out. Seems like you're already in profit, but we'll see. 55 seconds. I'm gonna lower down the music just slightly. Watch this volume down here. Volume's gonna kick in. 30 seconds. Remember, if you're in a trade and there's too much risk on the table, take it off now. Because you're just gambling. Have your risk managed before you put on a position. Huge. It's a huge key to being successful in trading. Alright, should be coming out right now. Let's see what we got. Moving up. Just gonna move up. I'm gonna put on the Qs, actually S&P right now. Big move on the S&P. SPX just shot up. Nice move. Alright, so we're starting to trend higher right now. Let's see what they released. Alright, interest rate. Alright, so they're signaling cuts this year. 5.1 to 4.6. So cuts are cut. They're projecting cuts this year. Or 2024. Eli Lilly's still pretty much flat. S&P shooting up. Wow. Nice 5-minute candle on S&P. Let's check your PayPal. Nice trade on PayPal. Beautiful. Let's see if they release the statement. We got the statement here and the projection materials. We could take a look at the PDF. Here we go. Recent indicators suggest growth of economic activity has slowed from its strong pace in third quarter. Job gains have moderated since earlier in the year, but remain strong, and unemployment rate has remained low. Inflation has eased over the past year, but remains elevated. U.S. banking system is sound and resilient. Tighter financial and credit conditions for households and businesses are likely to weigh on economic activity, hiring, and inflation. The extent of these effects remains uncertain. That's huge. The committee remains highly attentive to inflation risks. All right, so that's pretty much a summary of what we got. And we will hear from Mr. Powell in 29 minutes. He'll further explain. The committee seeks to achieve maximum employment and inflation rate of 2% over the long run. The committee has decided to maintain target rate of federal funds rate at 5.25% to 5.5%. So rates have remained the same as expected. That's good. The markets are evidently liking that decision, and they're moving higher. And the press statement was bullish. The summary, just reading the first couple paragraphs here, seems pretty good. So, and you can see SPX right now just had a huge 5-minute candle. Eli Lilly, of course, moving up. Everything's moving up. So, if this thing really starts to rally going into the next 28 minutes, you're going to start seeing headlines in the news either today or by tomorrow in the next couple days of new all-time highs on the S&P, NASDAQ, Dow Jones. Everything's going to start making all-time highs right now. So, and your PayPal's doing very well, Steve. Congratulations. Eli Lilly moving back up. Remember, guys, if you haven't hit the like button, please smash that like button right now. Try to get more people in here. I'd really appreciate it. That's the best thing you can do for me, is hit that like button. Alright, so good. Let's look at, and they also released the projection materials. Which we pretty much have right here, so you don't really need to look at this. So you can see the previous, you have, let me shorten this date range. This. So you can see the previous 5.1, now it's 4.6, 3.9, now it's 3.6, 4.6, 3.6, 2.9. So pretty much in the next 2 years, they are expecting to cut rates. Seeing 4 rate cuts in 2025. So, very good. Very good. All right, now we're starting to top wick a little bit. I think some of, well, the S&P is still up, but Eli Lilly's taking a little breather. Let's take a look at the rest of these stocks. AMD up big. Nvidia up big. Apple up. Everything's up. Amazon, Google, Netflix up higher. Tesla coming back up from its sell-off. Microsoft up, coming back from its sell-off. Alright, so yeah, in the next 26 minutes, once Jerome Powell starts speaking, we're going to see more of a move, either to the upside or downside. Let's take a look at interest rates on the 10-year. Let's look at the 10-year yield. Yep, there you go. 10-year dropped. Huge drop. About a 7 basis point drop. That's pretty big. So the 10-year is making new local lows. It's continuing this downtrend. Very bullish. Very, very bullish. No problem, Steve. Alright. So the bulls are happy today. Let's look at the daily charts on a lot of these stocks. Look at that candle on Netflix. God. Please don't go too much higher before I get in. I want to see Eli Lilly close above 600 today. AMD moving higher. Nvidia's probably going to start making new highs here next few days. Possibly today. We got to see what Jerome Powell's going to say. His speech will, or his press conference will really kick things up. And like I said before, I'm going to have the live feed of Jerome Powell's press conference ported right into this stream. So don't worry about, putting up another window or anything for his press conference. I'll have it up for you guys. I don't think I can really show it, but you can listen to it. And listening to it is all we need. we'll be able to watch the charts while he talks. Let's look at the VIX. VIX dropped. Big drop in the VIX. Volatility just collapsed on that news, so very good. LOY above 603 for 2 days would mean likely uptrend. Yep, probably. I mean, technically on a daily for LOY, we're still maintaining an uptrend. Let me hide some of these drawings for a moment. You look at LOY, like we're still holding this uptrend here. So technically we're still in an uptrend. We're good. We just need to see higher prices. Alright, let me put my lines back on here. Go. So the Fed is saying inflation falls to 2.4% next year. So, and their target's 2% inflation. And they're saying that this fourth quarter economic activity has slowed, which is good for inflation. And the job market is still remaining strong. So, I mean, these are the signs of a soft landing. Will it be a soft landing in the end? Who knows? But it's drifting that way. Further explain just what I said. The uptrend for LLY. Is that what you mean? Oh, inflation? Yeah, so inflation is dropping. Inflation is going down. Well, it has been going down. And the Fed is projecting inflation to further decrease, which is a good thing. We want inflation to go down. They're projecting it to decrease going into the new year. So that gives the Fed the ability to start cutting rates and start easing the economy. And they're saying that this quarter, fourth quarter, economic activity has slowed down. So when economic activity slows down, inflation cools down. That's why during like 2021, everyone was out buying cars, buying houses, leveraging, taking out debt because interest rates were low and the economy was very easy. And they were also pumping cash into, giving out stimulus checks, at least here in the US. And that causes the economy to overstimulate and prices increase too fast. So we don't want that to happen. Inflation is like one of the worst things that can happen to an economy. Well, there's that and then there's stagflation, which is even worse. Yep, so PayPal, and that's why PayPal's moving really, really good right now. PayPal's one of those companies that if interest rates go down, or if there's going to be cuts, you're going to see, like I said before, when they cut interest rates, it allows economic activity to speed back up. And PayPal is a payment processor, basically. And the more transactions go through, the higher economic activity occurring. PayPal is going to also see increased transactions, and PayPal makes their money off of transactions. They take a little bit of a fee every time someone buys and sells something and facilitates a transaction through PayPal. It helps PayPal. So that's why PayPal right now is up significantly. I mean, it went up almost 1% in 5 minutes and climbing. Yep, you got 60.11 right there. Congratulations on that. That was a great trade. We were looking at that earlier this morning, right? And I said if interest rates come down, if they're projecting cuts, you're going to see PayPal rip. Along with the rest of the market, of course. But yeah, PayPal's really doing well. But we'll see. You got to be careful right now. If you're in profit and you have a lot of risk on the table, I'd take some off. Don't get too greedy, because if Jay Powell starts speaking and he says something that's worrying him, I mean, believe me, this market can turn on like really fast. It could turn against you really fast. So be careful. I've I've witnessed enough FOMC events where the rate comes out, the market rallies like crazy, and then Jerome Powell starts speaking, and it just dumps. It dumps even lower where you originally started. So be very careful. Oh, I know I'm correct, Jason, because I've lost a lot of money from trying to trade FOMC events. I learned my lesson many years ago. So, and that's how you learn. The way I think the best way to learn the stock market is when you have skin in the game. And when you're losing money and you got to figure out, hey, how do I stop losing money? How do I actually do this in the long run successfully? And really, I think the best way to do it is to just get burned and learn the hard way. That's the only way you really learn. That's why when people say, like, oh, you could paper trade, like, paper trading's great. I'm an advocate for paper trading, but if you compare the psychology of paper money to actual money, it's completely different. Alright, LLY is moving up here. Sitting basically flat on my position right now. They pinned me flat. It's like they know. It's like the market makers know. They're like, hey, this guy has a call option right here. Don't go any higher. I'm just joking. This thing's probably going to rip up. So the Fed is projecting GDP falls to 1.4% next year. Which makes sense. And then it's going to go back up in 2025. But those are just projections. You can't... I mean, the Fed didn't even see inflation as a risk prior to inflation. I knew inflation was going to happen. I saw the M2 money supply during COVID, like 2020, how much it went up. I'm like, we're going to have inflation. And I was like one of the few people like screaming, pounding the table. Of course, to myself, I was just screaming into the void. I obviously wasn't running a YouTube channel or anything, but I knew inflation was going to be an issue. I'm like, no way you could print 50% of the money supply in 1 year and put that into the economy and not see inflation. Alright, moving up. We made $3, well, $980 I made today. So we did good. Today's a good day. Oh, everyone worries. Everyone worries when he starts speaking. And he's going to have a red tie on, a blue tie, a purple tie. People start getting into all that stuff too. Up $1,000 today. But now we're flat. Wait, I'm up $23 on my $18 on my position. So, but hey, this position was down 50%. So, thanks, Steve. All right, so 15 minutes until the big man starts talking. All members voted to keep rates unchanged, so this was a pretty broad decision. Gold is up, look at that, very interesting. So is gold up because they're projecting GDP to go down? Maybe. And how's Newmont? Is Newmont, there you go. Sean, was it you that had the Newmont position? Or you were discussing it? Someone in here was talking about NEM earlier. We were looking at it when it was down here. So Newmont's having a good day. Gold miners are happy. These are all gold miners here. AGI, GFI, AU, Ego. What's Bitcoin doing? Bitcoin going up. So the whole market's rallying. It's because yields are dropping. Yep, exactly, Jason. Yeah, that's it. Like the 10-year just dropped. This is a big drop. This move does not happen that often. It's a big drop. And it's still going down. 10-year treasury yield. TLT? Yep, TLT got smashed. And it's been ripping. TLT's a great trade, yep. Look at TLT. Believe it or not, TLT does well in November. And did it do well in November? Let's see. I think it did. It looks like it did just by looking at the daily. Oh yeah, TLT went up almost 10%, 9.92% in November. And it's continuing that run this month now. Very nice. Great swing trade. Alright, 13 minutes. 13 minutes until Jerome Powell starts speaking. Look at the amount of volume that came in. I'm looking at QQQ right now. Look at that big volume candle, or big volume stick right there. That's a lot of buying. Strong move. I'm out on PayPal because of bearish divergence. Is there bearish divergence? Let's go see. What are you using, RSI? Big volume coming in. Usually volume spikes. When you get the volume spikes like this, it can indicate a reversal, so you gotta be careful. Yeah. Are you looking at 1 minute? Yep, I see it. Hold on. Let me get rid of... I hate this MA-based band, but yeah, you can see that divergence is right here, so sloping down, and at the same spot, sloping up. So, good call. I mean, it could continue to go higher, but yeah, like I said, taking profit would probably be the smart thing because this can easily reverse going into the next like 10-15 minutes. So LLY coming back down. So LLY's that's funny. Right where my break even is, we just rejected. This 590, this blue horizontal line, this isn't like a level specific to the chart. This is just where my break even is on my position. And it just like top looked right at it. That's funny. Wait till tomorrow, can't be JP. Yep. It's funny how this works, right? Like this isn't even like a technical, I mean it could be. Maybe it is a level where I don't really see any significance in this area, but yep. That's how the cookie crumbles. But now, like, what I would want to see is a pullback to this HMA and a continuation. And then, of course, the 15-minute would have to break higher. It's a waiting game. So the market's going to start consolidating again. And the VIX is probably going to start going back up because of Jerome Powell. Yeah, see, so the VIX dumped, bought back up. So now the volatility is going to start creeping back into the market until JP starts talking. See how many things you have to like keep track of when you try to day trade? It's just like so stressful. Like I can do this for like 1 day and then I'm done. I'd rather just, you know, analyze and watch everything instead of having a day trade on. I'll be right back. I'm gonna grab another coffee. All right, we're back. Coffee acquired. Waiting for Jerome Powell to start speaking. And like I said before, if anyone's just joining, please make sure to hit the like button. Also, I'll be porting in Jerome Powell's press conference into this stream, so no need to run off to another stream. I have everything right here. We can watch the charts, analyze at the same time. I appreciate you all tuning in, hanging out. Been live for an hour, man. Every time I get on stream, I'll be talking, having a good time, and then I look at the timestamp. I'm like, wow, I've already been streaming for like an hour. It's like it goes by like that. Wow, look at AMD. Holy moly. Wow. AMD is like going crazy. Did it reach all-time highs yet? It's very close now. Still got a ways to go though. Little ways to go. It's getting there. Let's look at Eli Lilly on a weekly chart. Look at that weekly bottom wick. I actually haven't looked at this chart on a weekly time frame yet. That looks bullish. If we could flip this candle green on the week, that'd be really good. Love the higher time frame stuff. I think it's so important to look at the high time frame, the weekly and the monthly charts. It just gives you such a good good perception of what's really occurring. Very nice. So now it's almost like we're stuck in this range. Right? This like 600 level. Between the 580 and 600 level, we've just been oscillating back and forth. I'm gonna get rid of this break-even price here. But it's like resistance, resistance, and then you got support all along here. You can see it had support down here and then it broke through, but it's kind of like we're in one of these types of ranges here. It's just like, which way are you gonna go? Up or down? It's a waiting game. Coca-Cola. Let's see what Coca-Cola is doing. So I was talking about this one last night, right? I think you were the one that brought it up, Steve. Yeah, look at what's happening now. I think it was this one in Home Depot. Someone else was talking about Home Depot. Yeah, Coke's ripping higher. I mean, 0.5%, believe it or not, 0.5% move on Coca-Cola is a lot. Especially with an option. Coca-Cola is a lower IV stock. It tends to just oscillate more, trade sideways, lower volatility. Pays a great dividend though, 3.1% dividend, beautiful. And let's look at Home Depot, HD. Look at that. You remember, Home Depot has a very, very strong correlation to the housing market too. When more people are buying homes and the housing market's doing good, they're more likely to repair and do renovations and things to their houses, so that directly affects Home Depot. It's very interesting when you dig deep into the actual fundamentals of a stock. Like you just get such a better picture of what to do and what your sentiment is. You know, if housing's doing well, Home Depot should be doing well. You know, try to... I'm not saying don't trust the charts, don't use the charts, but, you know, take into consideration other analytical points. Think outside the box. Goes a long way. So yeah, Home Depot looking great. everything's looking great right now. So, wow, the 2 years just getting demolished right now. Whew. New lows on the 10-year, new lows on the, well, not new lows, but new local lows. All right, I'm gonna shut off the music, and we are gonna put up the speech in a couple minutes. Got that primed, ready to go. And yeah, we're going to be off to the races here. Eli Lilly pretty much came back down to its average here. It's coming back down to the HMA, so hopefully we see support come in here. If not, probably start heading lower. So Jerome Powell's going to start speaking, guys, so get ready. Remember, if you're up on a position right now, like a day trade, you know, be careful. This I've seen it so many times where the market's up big after the interest rate decision, and then Jerome Powell starts speaking and things just flush. So be ready. But so far, this seems like a good event. So the Fed is seeing 3 rate cuts going into 2024. Those will probably happen in like June of 2024. You also got to remember it's an election year, at least here in the US. Election years, stock market tends to do really well in election years. Believe it or not, there's seasonality with election years and like first years of presidents. There's seasonality in other than just like month to month, like what I focus on. So, all right, let's see if I can get the stream up now. It's 2:30. He hasn't come on stage yet, so we're still waiting. Sometimes he's a couple minutes late. He's trying to pick which tie he should wear. Are we getting a bounce on LLY? Come on, baby. Bounce. Go higher. Still waiting here. Nothing yet. Still nothing. He's a little late today. All right, he's speaking now, but I'm not able to get the feed. Hold on. Let me try a different source. Here we go.
Fully committed to returning inflation to our 2% goal.
Sorry about that, guys.
Restoring price stability is essential to achieve a sustained period of strong labor market conditions that benefit all. Since early last year, the FOMC has significantly tightened the stance of monetary policy. We've raised our policy interest rate by 5.25 percentage points and have continued to reduce our securities holdings at a brisk pace. Our actions have moved our policy rate well into restrictive territory, meaning that tight policy is putting downward pressure on economic activity and inflation, and the full effects of our tightening likely have not yet been felt. Today, we decided to leave our policy interest rate unchanged and to continue to reduce our securities holdings. Given how far we have come, along with the uncertainties and risks that we face, the committee is proceeding carefully. We will make decisions about the extent of any additional policy firming and how long policy will remain restrictive based on the totality of the incoming data, the evolving outlook, and the balance of risks. I will have more to say about monetary policy after briefly reviewing economic developments. Recent indicators suggest that growth of economic activity has slowed substantially from the outsized pace seen in the third quarter. Even so, GDP is on track to expand around 2.5% for the year as a whole, bolstered by strong consumer demand as well as improving supply conditions. After picking somewhat over the summer, activity in the housing sector has flattened out and remains well below the levels of a year ago, largely reflecting higher mortgage rates. Higher interest rates also appear to be weighing on business fixed investment. In our summary of economic projections, committee participants revised up their assessments of GDP growth this year, but expect growth to cool, with the median projection falling to 1.4% next year. The labor market remains tight, but supply and demand conditions continue to come into better balance. Over the past 3 months, payroll job gains averaged 204,000 jobs per month, a strong pace that is nevertheless below that seen earlier in the year. The unemployment rate remains low at 3.7%. Strong job creation has been accompanied by an increase in the supply of workers. The labor force participation rate has moved up since last year, particularly for individuals aged 25 to 54 years, and immigration has returned to pre-pandemic levels. Nominal wage growth appears to be easing, and job vacancies have declined. Although the jobs to workers gap has narrowed, labor demand still exceeds the supply of available workers. FOMC participants expect the rebalancing in the labor market to continue, easing upward pressures on inflation. The median unemployment rate projection in the SEP rises somewhat from 3.8% at the end of this year to 4.1% at the end of next year.
Here we go. Here are the
Inflation has
projections.
eased over the past year, but remains above our longer-run goal of 2%. Based on the Consumer Price Index and other data, we estimate that total PCE prices rose 2.6% over the 12 months ending in November, and that, excluding the volatile food and energy categories, core PCE prices rose 3.1%. The lower inflation readings over the past several months are welcome, but we will need to see further evidence to build confidence that inflation is moving down sustainably toward our goal. Longer-term inflation expectations appear to remain well anchored, as reflected in a broad range of surveys of households, businesses, and forecasters, as well as measures from financial markets. As is evident from the SEP, we anticipate that the process of getting inflation all the way to 2% will take some time. The median projection in the SEP is 2.8% this year, falls to 2.4% next year, and reaches 2% in 2026. The Fed's monetary policy actions are guided by our mandate to promote maximum employment and stable prices for the American people. My colleagues and I are acutely aware that high inflation imposes significant hardship as it erodes purchasing power, especially for those least able to meet the higher costs of essentials like food, housing, and transportation. We're highly attentive to the risks that high inflation poses to both sides of our mandate, and we are strongly committed to returning inflation to our 2% objective. As I noted earlier, since early last year, we have raised our policy rate by 5.25 percentage points, and we have decreased our securities holdings by more than $1 trillion. Our restrictive stance of monetary policy is putting downward pressure on economic activity and inflation. The committee decided at today's meeting to maintain the target range for the federal funds rate at 5.25 to 5.5%, and to continue the process of significantly reducing our securities holdings.
S&P
While
is
we
rallying
believe
still.
that our policy rate is likely at or near its peak for this tightening cycle, the economy has surprised forecasters in many ways since the pandemic, and ongoing progress toward our 2% inflation objective is not assured. We are prepared to tighten policy further if appropriate. We're committed to achieving a stance of monetary policy that is sufficiently restrictive to bring inflation sustainably down to 2% over time, and
Hey
to
guys,
keeping policy restrictive
the
until we're
SPY has
confident
just
that
hit new
inflation
all-time
is on
highs.
a path
New all-time
to that
highs on the
objective.
S&P 500.
In our SEP,
maybe
FOMC
on the SPY,
participants
but
wrote
not on
down
the
their
SPX.
individual assessments of an appropriate path for the
And
federal
the
funds
Qs, I
rate
think, are about to
based
hit new
on what
highs.
each participant judges to be the most likely scenario going forward. While participants do not view it as likely to be appropriate to raise interest rates further, Neither do they want to take the possibility off the table. If the economy evolves as projected, the median participant projects that the appropriate level of the federal funds rate will be 4.6% at the end of 2024, 3.6% at the end of 2025, and 2.9% at the end of 2026, still above the median longer-term rate. These projections are not a committee decision or plan. If the economy does not evolve as projected, the path of policy will adjust as appropriate to foster our maximum employment and price stability goals. In light of the uncertainties and risks and how far we have come, the committee is proceeding carefully. We will continue to make our decisions meeting by meeting based on the totality of the incoming data and their implications for the outlook for economic activity and inflation, as well as the balance of risks. In determining the extent of any additional policy firming that may be appropriate to return inflation to 2% over time, the committee will take into account the cumulative tightening of monetary policy, the lags with which monetary policy affects economic activity and inflation, and economic and financial developments. We remain committed to bringing inflation back down to our 2% goal and to keeping longer-term inflation expectations well anchored. Restoring price stability is essential to set the stage for achieving maximum employment and stable prices over the longer run. To conclude, we understand that our actions affect communities, families, and businesses across the country. Everything we do is in service to our public mission. We at the Fed will do everything we can to achieve our maximum employment and price stability goals. Thank you. I look forward to your questions.
Thank you. Chris Rugaber at Associated Press. I wanted to ask, how should we interpret the addition of the word any before additional firming in the statement? I mean, does that mean that you're pretty much done with rate hikes and the committee has shifted away from a tightening bias and toward a more neutral stance? Thank you.
So, specifically on any, we do say that in determining the extent of any additional policy firming that may be appropriate, so any additional policy firming, that sentence. So we added the word any as an acknowledgement that we believe that we are likely at or near the peak rate for this cycle. Participants didn't write down additional hikes that we believe are likely, so that's what we wrote down. But participants also didn't want to take the possibility of further hikes off the table. So that's really what we were thinking.
Mr. Chairman, the microphone, sorry. Steve Leisman, CNBC. Happy holidays, Mr. Chairman. Fed Governor Chris Waller said that if inflation continues to fall, then the
Don't
Fed,
worry about it, Steve. You'll get him next time.
in the
Good
next
job.
several months could be cutting interest rates. I wonder if you could comment on whether you agree with Fed Governor Waller on that the Fed would become more restrictive if it didn't cut rates if inflation fell. Thank you, sir.
So, of course, I don't comment on any other officials, even those who work at the Fed. But I'll try to answer your question more broadly. So the way we're looking at it is really this. When we started out, right, we said the first question is how fast to move, and we moved very fast. The second question is, really how high to raise the policy rate, and that's really the question that we're still on here. We're very focused on that. As I mentioned, people generally think that we're at or near that, and think it's not likely that we will hike, although they don't take that possibility off the table. So that's when you get to that question, and that's your answer. There's a naturally it begins to be the next question, which is when it will become appropriate to begin dialing back the amount of policy restraint that's in place. So that's really the next question, and that's what people are thinking about and talking about. And I would just say this. We are seeing, strong growth that appears to be moderating. We're seeing a labor market that is coming back into balance by so many measures, and we're seeing inflation making real progress. These are the things we've been wanting to see. We can't know. We still have a ways to go. No one is declaring victory. That would be premature, and we can't be guaranteed of this progress. So we're moving carefully in making that assessment of whether we need to do more or not, That's really the question that we're on. But of cose, the other question, the question
New
of
all-time
when will
highs
it
on the
become
Qs,
appropriate
guys.
to
New all-time
begin
high
dialing
on
back
the
the amount of
QQQ.
policy restraint in place. That
NASDAQ.
begins to come into view. and is clearly a topic of discussion now in the world, and also a discussion for us
3.44 was the
at our
previous
meeting
all-time
today.
high. We are now at 3.55.
The nature of that discussion today? Thank you.
Sure. So it comes up in this way today. Everybody wrote down an SEP forecast, so many people mentioned what their rate forecast was, and there was no back and forth, no attempt to sort of reach agreement, like this is what I wrote down, this is what I think, that kind of thing, and a preliminary kind of a discussion like that. Not everybody did that, but many people did. And I would say there's a general expectation that this will be a topic for us looking ahead. That's really what happened in today's meeting. I can't do the head count for you in real time, but that's generally what happened today.
Let's go to Rachel.
Hi, Chair Powell. Rachel Siegel from the Washington Post. Thanks for taking our questions. At this point, can you confidently say that the economy has avoided a recession and isn't heading for one now? And if the answer is no, I'm curious about what you'd still be looking for. Thanks.
I think you can say that there's little basis for thinking that the economy is in a recession now. I would say that. I think there's always a probability that there will be a recession in the next year, and it's a meaningful probability no matter what the economy is doing. So it's always a real possibility. The question is it? So it's a possibility here. I have always felt since the beginning that there was a possibility because of the unusual situation that the economy could cool off in a way that enabled inflation to come down without the kind of large job losses that have often been associated with high inflation and tightening cycles. So far, that's what we're seeing. That's what many forecasters on and off the committee are seeing. This result is not guaranteed. It is far too early to declare victory. And there are certainly risks. It's certainly possible that the economy will behave in an unexpected way. It has done that repeatedly in the post-pandemic period. Nonetheless, where we are is we see the things that I mentioned.
I'm curious if you're looking back on the past year, you talked about navigating by the stars under cloudy skies. Can you talk about some of the ways in which the economy surprised you most this year, where you thought it would behave in one way and had to pivot to respond? Thanks.
So I think forecasters generally, if you go back a year, were very broadly forecasting a recession for this year, for 2023. And not only did that not happen, that includes Fed forecasters and really essentially all forecasters. A very high proportion of forecasters were expecting very weak growth or a recession. Not only did that not happen, we actually had a very strong year. And that was a combination of strong demand, but also real gains on the supply side. So this was the year when labor force participation picked up, where immigration picked up, where the distortions to supply and demand from the pandemic, the shortages and the bottlenecks really began to unwind. So we had significant supply side gains with strong demand, and we got what looks like a 2.5% plus or a little more than that growth year at a time when potential growth this year might even have been higher than that just because of the healing on the supply side. So that was a surprise to just about everybody. I think the inflation forecast is roughly what people wrote down a year ago, but in a very different setting. And I would say the labor market, because of the stronger growth, has also been significantly better. If you look back at the SEP from a year ago, there was a significant increase in unemployment. That didn't really happen. We're still at 3.7%. So we've seen strong growth, still a tight labor market, but one that's coming back into balance with support from the supply side, a greater supply of labor. It's that's what we see, and that I think that combination was not anticipated broadly.
Howard.
Thanks, Howard Schneider with Reuters, and thanks for taking the questions. I wonder if you could give a little more color or detail on what motivates the lower rates next year, whether it's a coincidence, for example, that the spread between PCE inflation, core inflation, and the federal funds rate stays constant over the year. Are you simply calibrating against the fall in prices, in the price level that you're expecting, in the rate of inflation that you're expecting, as opposed to supporting the economy?
Nothing quite that mechanical is happening. The SEP really is a bottoms up, built from the bottom up, right? So I think people are looking at what's happening in the economy, and I think if you look at the big difference from September in the SEP, the expectations for inflation this year, both headline and core, have come down, really significantly in 3 months. That's a big piece of this. At the same time, growth is turned out to be very strong in the third quarter, is slowing, we believe, as appropriate. And we've had several labor market reports which suggest, again, significant progress toward greater balance across a broad range of indicators. You're seeing so many of the indicators coming back to normal.
All right, so
I think that
one thing to note, I kind of failed to mention this prior to putting up Jerome Powell's speech or press conference. Usually you don't get the real move until he's just about wrapped up speaking. So, hey, Recharge. So, once he's done speaking, then you'll start to see the real move take place in the markets. So far, it's to the upside. Like I said, the Qs, the SPY, they just made new all-time highs. So, you're going to start seeing that flash across headlines on the news channels here. But yeah, so wait, if you're going to put on a trade or something, be careful right now. We're kind of just oscillating. We did move up, but we're kind of just chopping around right now. So until he's finished speaking, I wouldn't put on any trades. I would just stay patient until he's done speaking. So I'll put him back on right now.
The tactics of this play out, given the slowing of inflation and the fact that the deeper you get into 2024, the closer you get to a presidential election. Do you want to front load this, in other words?
Yeah, no, we don't think about political events. We don't think about politics. We think about what's the right thing to do for the economy. The minute we start thinking about those things, we just can't do that. We have to think, what's the right thing? We'll do the things that we think are right for the economy at the time when we think is the right time. That's what we'll always do. So I mentioned we're moving carefully. One of the things we're moving carefully about is that decision over that assessment, really, over whether we've done enough, really. And you see that people are not writing down rate hikes. That's us thinking that we have done enough, but not feeling that really strongly, confidently, and not wanting to take the possibility of a rate hike off the table. Nonetheless, it's not the base case anymore, obviously, as it was, 60, 90 days ago. So that's how we're approaching things. And as I mentioned, we wrote down this SEP, and it talks about people have individual assessments of when it will be appropriate to start to dial back on the tight policy we have in place. And that's a discussion we'll be having going forward, but that's another assessment that we're going to make very carefully so as time goes forward.
Nick.
Nick Timmeros of the Wall Street Journal. Chair Powell, you've argued over the last year that policy tightening started before you actually lifted off because the market anticipated your moves and tightened on your behalf. The market is now easing policy on your behalf by anticipating a funds rate by next September that's a full point below the current level, with cuts beginning around March. Is this something that you are broadly comfortable with?
So this last year has been remarkable for the sort of seesaw thing back and forth we've had over the course of the year, of markets moving away and moving back and that kind of thing. So, and what I would just say is that we focus on what we have to do and how we need to use our tools to achieve our goals, and that's what we really focus on. And people are going to have different forecasts about the economy, and those are going to show up in market conditions, or they won't, but in any case, we have to do what we think is right. And, in the long run, it's important that financial conditions become aligned or are aligned with what we're trying to accomplish. And in the long run, they will be, of course, because we will do what it takes to get to our goals. And ultimately, that will mean that financial conditions will come along. But in the meantime, there can be back and forth, and I'm just focused on what's the right thing for us to do, and my colleagues are focused on that too.
The markets seem to think inflation is coming down credibly. Do you believe we're at the point where inflation is coming down credibly?
Listen, I welcome the progress. I think it's It's really good to see the progress that we're making. I think if you look at the 12-month measure, look at the 6-month measures, you see very low numbers. If you look at 12-month measures, you're still well above 2%. You're actually above 3% on core through November at PCE. That isn't to say I'm not calling into question the progress. It's great. We just need to see more. We need to see continued further progress toward getting back to 2%. That's what we need to see. So. It's our job to restore price stability, and that it's one of our 2 jobs along with maximum employment, and they're equal. So we're very focused on doing that. As I mentioned, we're moving carefully at this point. We're pleased with the progress, but we see the need for further progress. And I think it's fair to say. There is a lot of uncertainty about going forward. We've seen the economy move in surprising directions, so we're just going to need to see more further progress.
Gina Smilik, New York Times. Thanks for taking our questions. In the SEP from today, growth is notably below potential in 2024. If growth were to surprise us again in the way that it has for years now by being stronger than expected next year, would it still be possible to cut rates? Or put another way, is below trend growth necessary to cut rates, or would continued progress on inflation alone be sufficient?
So we'll look at the totality of the data. Growth is one thing. So is inflation, so is labor market data. So we look at the total as we make decisions about policy changes going forward. We're looking at all those things, and particularly about as they affect the outlook. It's ultimately all about the outlook and the balance of risks as well. So that's what we'd be looking for. If we have stronger growth, that'll be good for people. That'll be good for the labor market. It might actually mean that it takes a little longer to get inflation down to 2%. We will get it down to 2%. But
since 2 o'clock.
If we see stronger growth, we will set policy according to what we actually see, and so that's how I would answer.
I guess the question I'm asking, if you don't mind a quick follow-up, I guess the question I'm asking is above trend growth itself a problem?
It's only a problem it's not itself a problem. It's only a problem insofar as it makes it more difficult for us to achieve our goals. And if you have growth that's robust, what that will mean is probably will keep the labor market very strong. It probably will place some upward pressure on inflation. That could mean that it takes longer to get to 2% inflation.
You definitely don't want to be shorting bonds right now.
That could mean we need to keep rates higher for longer. It could even mean ultimately that we would need to hike again. It just is. It's the way our policy works.
Neil.
Hi, Chair Powell. Neil Irwin with Axios. How do you interpret the state of the labor market right now? And in particular, you've referred even today to evidence that it's coming into better balance. What would you need to see to conclude that it has reached that balance?
So on the better balance side, there's just a lot of things. It's you see job growth still strong, but moving back down to more sustainable levels given population growth and labor force participation. The things that are not quite, but let me go on with that list. Claims are low. If you look at surveys of businesses, they're sort of the era of this frantic labor shortage are behind us, and they're seeing a shortage of labor as being significantly alleviated. If you look at shortages of workers, whereas they thought job availability was the highest.
All right, that's enough of Jerome Powell. I'm going to keep him up on my screen just so I know when he stops his press conference. But yeah, let's talk about what just happened. So, new highs on S&P, or the SPY and Qs. The actual index themselves haven't made a new high, but the ETFs have. So this is about to make a new time. Let's check the ES. The ES hasn't made a new high yet, so it's getting close. But the Qs have made a new high. The SPY has also made a new high. So, very good. Steve put on a great trade on PayPal. And man, this thing is ripping right now. up 3.6% on the day. So I think the trade of the day was made by Steve. Although I told him to be careful when the press conference started. Yeah, and it was starting to go down, but then it just continued to rip higher. But still, you caught the first move. That's awesome. You can't ask for anything better than a little move like this. I mean, you gained 1% in 5 minutes. That's a lot. So congratulations. Yeah, I would have done the same thing. I mean, when I looked at that, I was like, yep, it's probably a good time to get out. And the amount of times I've seen the stock market reverse after the press conference, it may reverse right now. So if we see Jerome Powell get off the press conference, we can actually flush down still, so be careful. I'm just going to put him back on a little bit.
Some public opinion surveys. The thing that we can do is to do our jobs, which is to use our tools to foster price stability, which has such great benefits over such long periods of time, and which is the thing that really enables us to work for and achieve an extended period of high employment, which is so beneficial for, families and companies around the country.
Victoria?
Hi, Victoria Guido with Politico. I wanted to ask, on the flip side of if things start to deteriorate rapidly, if we do fall into a recession, if we do start to see unemployment rise at sort of the levels of inflation that we're seeing now, how would you all think about that in terms of rate cuts? Would that be a sign that you've done your job demand-wise?
Sorry, if
the economy looks like it's starting to fall into recession, if the jobless rate starts to rise.
That's not something we're hoping to see. Obviously, we're hoping to see something very different, which is continuation of what we have seen, which is the labor market coming into better balance without a significant increase in unemployment, inflation coming down without a significant increase in unemployment, and growth moderating without a significant increase in unemployment. That's what we're trying very much to achieve, and not something we're looking to see.
But would you take that as a signal that you should cut rates?
Obviously what we'll do is we'll look at the totality of the data, as I've mentioned a couple of times, and certainly the labor data would be important in that. And if you can describe a situation like that where if there were the beginning of a recession or something like that, then yes, that would certainly weigh heavily in that decision.
Michael McKee from Bloomberg Television and Radio. Mr. Chairman, you were, by your own admission, behind the curve in starting to raise rates to fight inflation. And you said earlier, again, the full effects of our tightening cycle have not yet been felt. How will you decide when to cut rates, and how will you ensure you're not behind the curve there?
So we're aware of the risk that we would hang on too long. We know that that's a risk, and we're very focused on not making that mistake. And we do regard the two, we've come back into a better balance between the risk of overdoing it and the risk of underdoing it. Not only that, we were able to focus hard on the price stability mandate, and we're getting back to the point where, which is what you do when you're very far from one of the two mandates. You're getting now back to the point where both mandates are important, and they're more in balance too. So I think we'll be very much keeping that in mind as we make policy going forward. And the things we'll be looking at, I've already described. We're obviously looking hard at what's happening with demand. And what we see the same thing other people see, which is a strong economy, which really put up quite a performance in 2023. We see good evidence and good reason to believe that growth will come in lower next year. And you see what the forecasts are. I think the median participant wrote down 1.4% growth, but we'll have to see. It's very hard to predict. We'll also be looking to see progress on inflation and the labor market remaining strong, but ideally without seeing the kind of large increase in unemployment that happens sometimes.
When you begin the cutting cycle, will it be essentially run the same way you do it now with raising rates, where you basically do trial and error cut and see what happens, or will you tie it to some particular measure of progress?
We haven't typically tried to articulate, with one exception, really specific target levels, which was, some of you will remember the thresholds that we used in, I guess, 2013. The answer is
SPY and QQQ,
these are things that we haven't, really worked out yet. We're sort of just at the beginning of that discussion.
Oscillating.
Edward.
Thank you, Mr. Chairman. Edward Lawrence of Fox Business. So if the Fed cuts rates, as the dot plot is showing, about 75 basis points, does that signal or that there's a belief of weakness next year in the economy?
It wouldn't, if that were, first of all, let me just say, that isn't a plan. That's just accumulating what people wrote down. So that's not something, you know this, but allow me to say it again. We don't debate or discuss what the right, whose SEP is right. We just say what they are and we tabulate them and publish them. So it's, it's important for people to know that. But it wouldn't need to be a sign of, it could just be a sign that the economy is normalizing and it doesn't need the tight policy. It depends on, the economy can evolve in many different ways, right? So, but it could be more what I just described.
And you focused on core inflation. We've heard from in other meetings. How sticky is core inflation right now?
Well, that's what we're finding out. And we've seen real progress in core inflation. It has been sticky, and famously the service sector is thought to be stickier, but we've actually seen reasonable progress in non-housing services, which was the area where you would expect to see less progress. We are seeing some progress there, though. And in fact, all three of the categories of core are now contributing. Goods, housing services, non-housing services, they're all contributing at different levels, meeting by meeting, or rather report by report. So, yeah.
Okay, let's go to Katerina.
Katerina Saraiva, Bloomberg News. Thanks for taking our questions. I just wanted to ask a little bit about, we had some pretty positive data this morning and yesterday. I'm assuming those were not incorporated into the forecasts we see today. But I just wanted to ask, how that kind of adds to your thinking, on the inflation outlook.
Right. So we got CPI the morning of the first day, and we got PPI the next day, which informs the translation into PCE. So it's very, very late in the game, but nonetheless, participants are allowed to, encouraged to update their SEP forecasts until probably mid-morning today. After that, so staff has to accumulate all of that and create the documents that you see. So until about mid-morning, a little maybe late morning, it's okay to update. And I believe some people did update their forecasts based on what we saw today.
Okay, and you see, how are you, when you think about, starting to think about the rate cuts next year or whenever they come, how do you think about the economy we're in now, kind of post-pandemic? Do you think that there's been significant structural shifts, and is that going to change how you look at a rate cut path?
The question of whether there have been fundamental structural shifts is really hard to know the answer, and a very interesting one right now. The one that would affect, one that comes to mind, though, is just the question of where the neutral rate of interest is. And so, for example, if it's risen, and I'm not saying that it has, but if it were to have risen, that would mean that interest rates would need to be a little bit higher to convey the same level of restriction. The thing is, we're not really going to know that. People will be writing papers about that 10 years from now and still fighting about it. So it's just that it's going to be uncertain. So we're going to be making policy in this difficult, uncertain, really unprecedented environment. Someone once said that you know the natural rate of interest by its works, and that's really right. But that's very difficult because policy operates with a lag. So it's one of the reasons why we slowed down this year. We started slowing down at this meeting last year, reducing the pace at which we were adding restriction. And over the course of this year, we really slowed down a lot to give those lags time to work. In terms of demand, has demand shifted more away from services into goods? You can make a case for that the shift back into services has not been complete, and it doesn't look like it's ongoing, but I don't know if that's right. Maybe people just bought so much stuff that they temporarily don't want any more stuff. They haven't got any place to put it.
Let's go to Jennifer.
Thank you, Chair Powell. Jennifer Schonberger with Yahoo Finance. You said back in July that you needed to start cutting rates before getting to 2% inflation. As you mentioned, PCE inflation is now running at 3.5% on core. On a 6-month annual basis, core PCE is running at 2.5%. Though when you look at super core and shelter, they are, of course, stickier. So in looking at the different components of the data, how much closer do you have to get to 2% before you consider cutting rates?
I mean, the reason you wouldn't wait to get to 2% to cut rates is that policy would be too late. I mean, you'd want to be reducing restriction on the economy well before 2%, because before you get to 2%, so you don't overshoot. If we think of restrictive policy as weighing on economic activity, it takes a while for policy to get into the economy, affect economic activity, and affect inflation. So I can't give you a precise answer, but if you look at what's in the SEP, and I think you'll see a reasonable estimate of the time lags and things like that it would take.
Do you think below 3% would be reasonable?
I wouldn't want to identify any one precise point, because I would be able to look back then and probably find out that it turned out not to be right. But we'll be looking at it and looking at the broad collection of factors.
Hi, Chair Powell, Jean Young with Market News. Wanted to go back to the stickiness of inflation question. Over the past couple of years, a lot of central bankers have talked about the more difficult last mile of getting inflation back down to 2%. Yet it's also been surprising how fast inflation has come down this year.
Unfortunately, I missed that, Sean. I was upstairs
I'm curious,
grabbing a drink.
Do you think something has changed in our understanding of inflation? Or do you subscribe to this notion still, or is it something different about the U.S. economy? Thank you.
I think this. We felt since the beginning that it would be a combination of two factors. The first factor is just the unwinding of what happened in the pandemic, the distortions to supply and demand, and the second thing would be our policy, which was weighing on aggregate demand and actually making it easier for the supply side to recover because of lower demand. We thought those two things were going to be necessary. Sorry, say the last part of your question again.
If there was something different about the U.S. economy.
Yeah, so it's not that it may or may not be about the U.S. economy being different. I think that this inflation was not the classic demand overload, pot boiling over kind of inflation that we think about. It was a combination of very strong demand, without question, and unusual supply side restrictions, both on the goods side but also on the labor side, because we had a participation shock. So this is just very unusual. And we had the view, my colleagues and I broadly had the view that we could get a lot of, you had essentially a vertical supply curve, because you ran into the limits of capacity at very low levels because there weren't workers and because people couldn't, the supply chains were all broken. So we had the view that you could come straight down that vertical supply curve to the extent demand reduced, and something like that has happened. It happened so far. The question is,
something's being said that the market doesn't like.
Once that part of it runs out, and we think it has a ways to run. We definitely think that the sort of supply chain and shortages side has some ways to run. Does labor force participation have much more to run? It might. Immigration could help, but it may be that at some point you will run out of supply side help, and then it goes down to demand, and it gets harder. That's very possible. But to say with certainty that the last mile is going to be different, I'd be reluctant to suggest that we have any certainty.
That's what I'm saying.
That.
Once
we
he
just
stops
don't know.
talking,
Inflation keeps
then the
coming
markets
down.
are going to start
The labor
moving
market
again,
keeps
either to the
getting
upside
back
or
into
downside.
balance.
It happens every single time during these events.
So far, so good. Although we kind of assume that it will get harder from here, but so far it hasn't.
go to Megan for the last question.
All right, last question.
Hi, Chair Powell. Thanks for taking our questions. Megan Casella with Barron's. I want to ask about the balance sheet, given the Fed's focus now on proceeding carefully and considering rate cuts. And can you talk us through what the latest thinking is, and has there been any consideration of altering the pace of quantitative tightening at all?
We're not talking about altering the pace of QT right now, just to get that out of the way. So balance sheet seems to be working pretty much as expected. What we've been seeing is, that we're allowing runoff each month. That's adding up. I think we're close to 1.2 trillion now. That's showing up. The reverse repo facility has been coming down quickly, and reserves have been either moving up or, as a result, or holding steady. At a certain point, there won't be any more to come out of, or there'll be a level where the reverse repo facility levels out, and at that point, reserves will start to come down. We still have, that we intend to reduce our securities holders until we judge that the quantity of reserve balances has reached a level somewhat above that consistent with ample reserves. And we also intend to slow and then stop the decline in size of the balance sheet when reserve balances are somewhat above the level judged to be consistent with ample reserves. We're not at those levels. With reserves close to $3.5 trillion. We don't think we're at those reserves. There isn't a lot of evidence of that. We're watching it carefully, and so far it's working pretty much as expected, we think.
Adjusting that thinking at all by the time you're considering or moving forward with rate cuts? Is that time to rethink, or are you still going to follow that thinking?
So I think they're on independent tracks. So you're asking, though, the question, I guess you're implying the question of can you continue with QT at such time, QT, which is a tightening action, at such time as policy is still tight. And the answer is it depends on the reason. If you're cutting rates because you're going back to normal, that's one thing. If you're cutting them because the economy is really weak, so you can imagine you have to know what the reason is to know whether it would be appropriate to do those two things at the same time.
Thank you.
Thanks very much.
Chairman Powell wrapping up 2023 and unleashing a monster rally. From New York City this afternoon, good afternoon, alongside Tom Keene.
All right, that's it. So let's see where the market goes now. He's done with his speech, and we'll see if his press conference. We'll see if the market moves a certain way. We'd rather sell off or go up here. Microphone over here. Alrighty. So it looks like we're starting to trend down. AMD just sold off huge. AMD was up 1%. Now it's only up 0.36. Same thing with NVIDIA. So if anything, Eli Lilly's not really taking that big of a hit compared to the other guys. So now we're going to get the real move in the market. Qs are back below all-time highs. And yeah. So, not too bad. Listen, we had a pretty decent day. Could have been a lot worse. So I'm quite happy. Well, at least I got my gain back on my LLY position. Not bad. Now I'm getting pulled aside in work, so don't mind me if I'm a little unresponsive for a moment. We'll see. We could get another rally into the last 30 minutes here. Just a lot of information to digest. Might get a move up, so. I was watching this this trend line right here. Looks like I drew it once we topped here, and then it came back up to it again and rejected. So we'll see if we break through it, move higher. Oh, check the volume. Volume's going to start increasing in the day. So not too bad. I made $725 today. Pretty good. I know Steve did a pretty good job. Yeah, he does speak a little too much. Like usually it's like, all right, just like cut off the conference at 30 minutes. Like once like 3 o'clock rolls around, like get the hell out of here. We heard enough. So, but the markets seem to be positive on all this news, so it's good. It could be setting us up for a continuation of this bull run into the new highs and into Thursday and Friday. So. Yep, exactly. So I'd say it's a pretty good day. I kind of want to see this break higher going into the 4 o'clock, going into the close. I wanted to see 600 touch today, but I don't think we're going to get it. The more time that passes on, the less likely it's going to happen. But they're 5 points below. Let's look at the daily here. So still stuck in this range on LLY. AMD's turning red. But if any of these had to turn red, it would probably be AMD because it ran up so much already. Nvidia's top looking. All right, so I think by next week, this Friday or next Monday, I think we'll have a good idea of where this market wants to head. I think things came in as expected today, so not bad. But yeah, this is selling off. Well, not selling off. It's just retracing back Back down. Let's see if this trend line holds. I don't even want to put this here because we haven't reversed yet, but let's say it's like right here. See if we break down. I think we are going to break down. A lot of the big tech is starting to sell off now. That's it. Now we're getting the real move in the market. See, Amazon's moving down. Google's moving down. We're getting that real move. I mean, it's not even a real move. It's just a sell-off after the press conference. So, but LOY is actually holding its own pretty well right now. Compared to everything else, LOY is actually holding up pretty good. Quite impressed. AMD's getting shellacking. Meta down. Microsoft down. New lows on Microsoft. Wow. Tesla came back to life. Tesla was down like, I think 3% today. Came back. Now it's coming back down. Went up, went back down. So big volatile day for Tesla. Netflix looking good still. Coming down. Everything's selling off now. Let's see if LOY gets a bounce here. It may not. Kind of in a symmetrical triangle. This is a neutral pattern technically, so it can break up or down either way. Even if all bears shorts exit, still it won't fall as Fed rate hike has stopped Powell. Hold on. I don't like this new chat. It like cuts off half the message with this heart symbol. Here we go. Even if all bears shorts exit, still it will fall. It won't fall. This Fed rate hike has stopped, and Powell says to reduce. Yeah. So that's the overall theme. I think long term this is a bullish conference, but we'll see what happens. Obviously the markets were happy today. But we'll see what happens over the next couple days. The next like 2-3 days will be pretty telling as to where this market wants to continue to head. But I really thought that the stock market or the economy would be in recession by now. If you asked me this time last year where we would be right now, I'd say recession, but it hasn't happened. So, I mean, this economy has been surprising. It's been very resilient. I think it's just because there's so much cash out there. A lot of dry powder on the sidelines. And, hey, you never know. Like, sometimes these types of things, they just play out luckily. Like, it's no different than, like, seasonality. Like, when I'm looking at seasonality, like, on anything, I'm like, you know what? Like, yeah, 70% of the time this goes up in November, but there's that 30% chance. And just like the economy, there's that chance that we don't get a recession. Everything is roses and daisies on the other side, and you know, it was just a great buying opportunity. You know, hindsight's always 20/20, but you know, never discount any move in the market. The market always humbles. It will humble you. LOY is trying to move up. Wow, look at AMD. AMD just went from up 1% to almost down 1% again. Crazy volatile day for AMD. LOY, wow. Is this going to go higher? We may get lucky. See, maybe the last 30 minutes we'll get a little rally in LLY. I mean, it's already rallying. It's almost up 2%, but I would expect LLY to move higher because it's just been so stationary to begin with. A lot of these stocks, Nvidia, Apple, they moved higher this week already. Today's like the first day LLY is actually doing something positive. Volume's increasing and we're going up. I like it. Appreciate all you guys hanging out for the stream. Appreciate all the likes. We got 10 likes on this stream. That's awesome. I think that's the most I've ever gotten. So I appreciate it, guys. I really enjoy doing these little streams, hanging out. Pretty cool. Again, if you're new here, real profits and losses I show only on real accounts only. And I don't sell anything. So those two things are pretty rare to find in the YouTube trading community, based on what I've seen. Because I've been watching a lot of YouTube trading related content for years now, and most people are frauds and scams, and they'll tell you anything as long as you buy their course for X amount of dollars. So yeah. All right, come on, LLY. Give me some life. Give me some profits. I want to see my open P&L turn green today. Well, it did turn positive, but very briefly around lunchtime. But the volume's kicking in now on LLY, and we're moving up pretty good. So high volume is to the upside right now, which is very good for me. We starting to get a move. Look at AMD bouncing back up. Just came to its low of day. Look at that. It went to high of day, crashed, low of day, buying back up. Same thing with Nvidia. Well, it came into the lows pre-interest rate decision, but yeah, let's see if we get a breakout here. It's 3:30. Let's see if we get it's the dirty 30. I call these the final 30 minutes. I call it the dirty 30. So we'll see, and then we'll get to the filthy 5. Oh man, what a day. So yeah, 2024 next year, if we get rate cuts, which I think we are, it's gonna be good. Here's the thing though. Usually when the Fed is cutting rates, it's because the stock market just crashed and the economy just crashed or is crashing. So be careful. Just because rate hikes are going down, like there are rate cuts, it's usually because the economy's faltering and potentially the stock market's faltering. So, be careful. Keep that in mind. These things can go either way real quick. My short time of market experience, which is like nearly 10 years of experience, never discount an opinion or a possibility in the stock market because it doesn't care what you think. You're either right or you're wrong. It's cutthroat. It's a binary type of thing. And if you're right, you make money. If you're wrong, you lose money. It's that simple. All right. Hopefully we can get a move higher here with LLY. Just had a nice 5-minute candle, but kind of just chilling out inside this triangle. AMD recovered. It's pretty much flat on the day now. The Qs are back below all-time highs. And I think the SPY as well is below. So today we'll see where we close out. I'm gonna stream until the close, and then I'll head out. But we'll see where my P&L ends up for the close. So far, we made $810 today, so not bad. Not bad at all. So did anyone have any good trades? Any swing trades? Any positions? Let's discuss. Let's do some analysis. If you guys have any stocks you want me to look at, plug them away into the chat. Take a look at them. I do a lot of analysis and it's fun. We can look at seasonality, any stocks you want to look at, plug them in. Looks like LOY wants to move higher here. Let's see if we break this upper trend. Keeping an eye on that. Let's see where PayPal is. PayPal was ripping. Oh, it's going even higher. Well, not even higher, but it's moving back up. That's a good sign. Very nice. Five-year yield at lowest level since July. So the 5 years taking a dump. Look at that. I mean, yields, I was saying this before the meeting. Yields, I was ready for this to crash. TLT would have been a good trade for today. Very nice. Still waiting on this to break out. We're just getting a green signal on our HMA. We'll see if we start moving higher here into the final 18 minutes. Or I'm sorry, 22 minutes of the market open. This looks like it wants to go higher. Big volume coming in here. Come on, baby. Push. Do it. Do it. Do it. Big volume. There's a good chance we see 600 on LOI by market close if we break out here. If it doesn't happen right now, then it's a donezo for today. That's all we get. Although I'm not complaining after today. We had a good day, or I had a good day. And whoever else is in LOI is also having a good day. So, all right, HMA curled green, it closed, and let's see if we get a continuation move to the upside. We're right on that upper trend line. Looks like we want to break it. We'll see. We will see. Big volume. You see the volume at the bottom? It's starting to spike because it's the end of the day. And we're moving up on the big volume, so that's a good sign. And if you look at today, all the big volume spikes were all green. That tells you something. That means that the big players, the big money, are the main buyers of today's market. Big volume is buying. And when big volume is selling, that means that the bears are in control. But not today. Dow on pace for record close. Is that right? Let's see. Wow. So I was looking at this before, and I don't think the Dow reached its all-time high yet, but the Dow Jones Industrial Average has just reached an all-time high. That's it, folks. That is all. That's all you need to know there. So this market is ripping. I think 2024 could be a good year. And also, 2024 is an election year. Most of the time, the stock market does very well during election years. So, it's actually a seasonality. Kind of excited for 2024 now. Very excited. I think it's going to be a good year. You know, my philosophy is that the markets trend up over time. And that's one of the reasons why I stick with staying long. I buy calls. I don't really do much with puts. Maybe except for like September when the market's typically bearish, but it's one of the benefits of going long over time, because the markets trend up over time. You're more likely to make money to the upside. So. Oh man, I'm getting tired. So is anyone holding any swing positions so far? Anything? Bueller? Any swing positions, any day trades, any scalps, anything? Bearish divergence. Yeah, it makes sense that there's bearish divergence right now. A lot of the market's consolidating and chopping. Like now AMD's back up. AMD went from like down 1%, up 1%, down 1% again, and now it's like pinned almost flat. So, and now we're getting a top wick on LLY right at that upper trend line. Shucks, maybe we aren't going to get a 600 close today. I think that's asking a little bit too much. Let's see if there's divergence on LLY. Ready? Nope. Nope. Bouncing off the 14 SMA on the RSI, but nothing much there. Yeah. Yeah, it's definitely been consolidating. It's stuck in a range on the daily. I mean, look at this. Oops. Like, we've been stuck between 580 and 600 since pretty much mid-November. So it's been almost a month since LLY has been stuck in this range. Right in here. Stuck between 600 and 580. So see if it breaks out eventually. It's got to go somewhere eventually. Hopefully it goes up within the next couple weeks. If it does, I make some money. I need some money. I'm going to have to get another job. School, YouTube, and regular work isn't enough. Although YouTube doesn't feel like a job. Not at all. I enjoy it. It's a hobby. Fun stuff. Oh, look at that. They just smacked it. They just smacked LOY right at the top of that range. Damn. Down she goes. We'll say they are putting on risk into the close. So the buyers are stepping in towards the end of the day. The end of the day tells you a lot, especially on like a Friday. When you see a lot of buying on a Friday, especially into the afternoon and the evening, it tells you that there is some appetite for higher risk by the big money. And they're putting on money, like when you see like AMD or Nvidia or Apple go up a lot, those are considered, believe it or not, risky equities, especially in tech. And that's what we saw last Friday. We saw a lot of money pour into risk on Friday. And why? Well, because maybe institutions thought this week would be a positive week with CPI and the Fed, and it's playing out that way so far. And plus, we're into a seasonally stronger period of the year. So October, November, and a little bit of December is a pretty good time of the year for the market. And of course, going into January until May, the markets tend to do well. And then going to the summer, the markets kind of calm down. And then they pick up again and do the same thing most of the time. So you gotta, like, knowing seasonality and market trends and patterns on a macro basis is so important. Because you're not just looking at the charts on an intraday chart and just guessing where it's going. You have to have an overall theme and an overall bias to the upside or downside at certain times of the year and for certain kinds of equities. So, oh, we just bottom wicked and reversed this 5-minute candle. Maybe we are going to break higher here. We could be flagging right now. Let's see. AMD's moving up higher. Come on. All right, we're getting to the final 10 minutes of the day. Let's see some big volume come in right now to the upside. I want to see the big volume. It'd be nice to see my position close flat on the day. That'd make me feel good. Here we go. Volume's kicking in now. Oh, top wick. Yeah, I think we're gonna be stuck right in here, and then we'll see what pre or after hours trading does, and then till tomorrow. Tomorrow's a new day. Come on. Go higher. Push. I feel like I'm watching a horse race right now. Come on. Yeah, it keeps getting slammed back down. You see that? If the buyers keep pushing up, it could break higher, but they're battling it out right now. Good volume on this candle. Oh, top wick red. There we go. I want to see it break this top wick. There we go. Come on. Come on. Come on. Getting into the final 8 minutes. There we go. 7 minutes. These moves at the end of the day can be really big, so be ready. Now what I want to see is it break pretty much 580 and then 598 and then make new local highs. It can get up there fast with this kind of volume at the end of the day. So that's where volatility comes in. Up $905 now. Just trying to push higher. There we go. There we go. Oh, getting slammed back down. Back and forth. Oh man, we are getting a push hard here. All right. Big volumes coming in, bottom wick. We're in the final 5, the filthy 5 minutes of the day. Let's see if this high volume pushes us up to like 600. We can get some big moves at the end of the day. Especially on LOY. I've always noticed LOY, the last 30 minutes of the day can really just change the entire course. There we go. There we go, baby. Come on. Put me flat on the day. Get my P&L to 0. She's pushing higher now. Alright, listen, I'll take this. I'll take this. This is a good day. This is a good day. Now I'm happy. Now I'm happy. Final 2 minutes here. Ooh, pushing higher, big volume. This is looking really good now, guys. It's looking really good. I'm excited for tomorrow. I'm excited for tomorrow and Friday. Are we going to make new local highs? New day highs here? Oh my gosh. Good day. Good way to end off the stream. Final minute here. Final minute. I am up $1,000 today. But I'm only up $3.60 on open P&L, so. But hey, we wiped out that whole loss today, which is great. Now we just have the rest of the month to play with. We'll see if we can churn a good profit over the next couple weeks. I really wanted to see 600 hit today, but we didn't get it. So we're pretty close. Final minutes here. Selling off now. A little sell off. I think we're going to close it out right here. That's it, guys. That's it. And the market is closed. All right. That's about it. So, my position made $960 today. Open P&L is negative $16.40. So we're down about $30. If you look at the bid price, not too bad. Not too bad. So that's it, guys. Thanks for watching. Had a good day. Did a lot of trading. Well, not trading, but analysis. By the way, if you guys haven't heard already, new highs on the Dow Jones Industrial. New highs. Well, I think we're just below new highs. Nope, new highs on the Qs. And new highs on the SPY. So, guys, it was a really good day. I mean, this is what we wanted. This is what I wanted. Talking about it last night and yesterday. It's exactly how I wanted it. I wish LOY went higher, but hey, can't win them all. Still got the rest of the month to hold on to this trade. Looking in a good shape. Let's see if we get a breakout. We really need a breakout on this stock. But until then, I'll catch you guys on the flip side. Thank you so much for watching, guys. Thank you for the likes and comments and chatting. Had a good time talking to you all, and I'll catch up with you soon. Have a nice day, guys. Peace.